Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Okay, I hope everyone is doing well. Let's recite Al-Fatihah first. Bismillahirrahmanirrahim. And respective prayers, yeah, for other religions besides Islam. Okay, I'm quite rushing today because I have meeting at 9. So we'll continue the previous topic. I believe we stopped at this last week. Am I right?
Yes,
Right.
Miss.
Yeah. So we continue with summarizing the chart of accounts for a merchandising business. So normally, the account numbering for merchandising business, it will start with one code at the beginning for the classification of the items under the financial statements. Yeah. So let's say one is for asset. Yeah. And then they would have a sub classification number after that. Okay, let's say 1 it refers to current asset. Yeah. And then a further sub classification, let's say cash, then they would add another digit into it. 110 refers to cash. Yeah. So you see account receivable is 112. So 1 refers to the main classification of asset. The next digit 1, it further classifies as current assets. And the 2 is the specific account number identification, yeah, for each account. Okay. So it follows with other types of components of financial statements like liabilities. Normally it would label the digit 2 for liabilities, and then current liabilities would have 1 after the 2, and a further subclassification would accordingly be numbered. Yeah. 3 for honest equities, 4 for revenues, 5 for costs and expenses, and the rest. Yeah. Okay, so this is the explanation as I mentioned just now. So the first digit indicates the major classification of the components of financial statements. And then the second digit indicates the sub-classification, while the third shows us the specific account number for each account. Yeah? Okay, moving forward, there's another issue for merchandising business, which is about the sales taxes and trade discounts. Okay, so most countries will impose a tax on sales of merchandise. Yeah, even the service industry also are imposed with service tax. You see, if you eat at Pizza Hut, let's say, you will be charged with service tax. Yeah, let's say 3% or other percentage. Okay, so the same thing for merchandising business. We are actually paying the sales tax to the government. So the merchandising business is supposed to pay the tax on the buyer's behalf. Yeah? We are the buyer, the end buyers, konsumen akhir. We are paying the sales tax, and then the company, which is the seller, the merchandising business, will collect the tax from us and then later on pay to the government. Okay. So whenever the sale is met, the liability for the sales tax will be incurred. Okay, for example, say in this case, the seller make a sale, credit sale of 100,000. The tax is 6%. So the company, the merchandising business, would record debit account receivable 106,000. and then sales 100,000, and the sales tax payable 6,000. Yeah. So this is the liability which will later on be paid to the government. Okay. In Indonesia, normally the tax is 10%, yeah, PPN, yeah. Okay, later on, okay, the company would pay the tax to the government, yeah, basically to the DJP, yeah, Direktorat Jenderal Pajak, okay. So they would debit the sales tax payable and then credit cash, yeah, for the payment of sales tax collected from the customers, yeah. So it's not the merchandising business is paying the tax. We are paying the tax, but it is facilitated by the merchandising business. Yeah? Well, what I mean by we are the final buyers. Yeah? When we buy stuffs from anywhere, we pay the tax, yeah? And then the company will later on pay the tax to the government on our behalf. Yeah? Okay, another issue is trade discounts. Yeah? Previously, you have learned about discount that is obtained because the payment is made within the discount period. That one is called as cash discount. Okay, but this one is another type of discount, which is the trade discount. Yeah, trade discount is a discount given to the customer who buys the goods in bulk purchases in a large quantity. Yeah? We call it a bulk purchases dalam kuantitas yang besar. Yeah? So the seller would give a special discount called as trade discount. Yeah? In the beginning of the transaction. Okay? If you remember, the previous discount is given when the company is making the payment within the discount period. So that one is cash discount. This one is trade discount. Okay. So normally trade discounts will not be recorded in either the seller or the purchaser's accounts. Yeah? So it would be recorded the net amount immediately. Yeah. Let's say the seller here, the list price is 1 million, but it has 40% trade discount. So the seller would record the sale at 600,000, yeah, already deducted the trade discount amount. The same thing with the buyer would record the purchase at 600,000, yeah, okay. Cash discount also you do the net amount, right? So it's basically the same. The idea of giving a trade discount is basically the same like the company giving the cash discount because they want to maintain the relationship with their customers. Yeah? And then to also sometimes to hide the real price of the commodity. Okay, you see why they hide price? They don't want their competitors to know the real price of the commodity. So they would put the list price in the catalog at a higher price, but actually there is a trade discount. So the buyer is paying less than what is written in the catalog. Yeah? Okay, now let's see the financial statements for a merchandising business. The types of financial statements are the same, but the structure of financial statement would be a little bit different, especially the income statement, and a little bit different for statement of financial position. Yeah. Okay, let's look at the income statement first. Yeah. The mainly different between the service company and merchandising company. Yeah. So under merchandising business, the income statement can be prepared in two forms. Yeah? First is multiple step income statement. And second is single step income statement. Yeah. For multiple step income statements, the income statement is prepared in detail, and it goes step by step from the sales of the product itself, the main product, what the company is selling. So that one will be portrayed here in the sales first, and then cost of goods sold or merchandise sold, and it shows the information of gross profit. And then it will deduct the expenses. The expenses again is classified, it's sub-classified. There are selling expenses and then administrative expenses. So that's why it's called multiple step, because it goes step by step. The expenses is step by step, even the profit also step by step. It shows the gross profit first, and then after deducting all the operating expenses, we'll get the income from operations. And then other income and expenses are positioned after that. So let's say the company has a rent revenue, but also it has interest expense, so it will be offset here. Then only income from operation minus other income and expenses will give us the net income. Okay, so that what is called as multiple step income statement. A second type of income statement. Okay, this is the detailed explanation of each item. Okay. A single step income statement is basically, it's a very straightforward income statement. So whatever revenue, it will be combined in the first section. Okay. So the revenues from sale and other revenue as well. Jadi digabungkan semua revenue di atas, tidak dipisahkan. And then expenses, it doesn't have detailed types of expenses, okay? But it will combine all kinds of expenses under one heading. And then straightforward, it will give us the net income, okay? So the single step income statement doesn't give us the detailed information. What is the gross profit from the main operation of the business? And then what is the net income from other activities of the business? Okay. As well, it doesn't give us the detail of what is the content of selling expenses. Okay. It's straightforward, the whole amount of selling expenses. So we do not know the detail of each types of expenses. Okay. So there is a pro and cons between the two types of income statement. The multiple step income statement will give us a more detailed information for the purpose of decision making. Okay. So let's say the investors, they can identify, let me go back. They can identify what is the gross profit from the main activities of the company. Okay. So let's say the gross profit is very low, means the company is not functioning really well from their main operation. Okay. And then they can identify the information from the expenses. Okay. What kind of expenses is actually demanding a lot of cost or fund from the company. Okay. So it gives us more information. But in terms of preparation, it is more complicated. Meanwhile, the single step income statement, the shortcoming is kekurangan, the weakness. The weakness is it doesn't give us the detailed information for the purpose of decision making. Why I always mention the decision making? Because accounting is supposed to give information that is useful for decision making by the users of financial statement. But the good thing of single step income statement is it is simple. Yeah, it can be easily prepared, and also it gives us a simple information what is total expenses and what is the total revenue. Okay. Okay, nothing much different for statement of owner's equity, yeah, as compared to what you have learned for service company. So the opening capital, how much, and then plus net income. If it is net loss, then it will be minus, right? Net loss, and then less withdrawals, and then how much it result in the increase of owner's equity. 75 400,000 minus 18,000, so it will give us the increase in owner's equity. Let's say this amount give us a negative, so it will give us the decrease in owner's equity. Yeah? And then lastly, the ending balance of the capital. Yeah? After adding the opening capital plus the increase in owner's equity. Okay, if you have any question, just stop me, okay, anytime. Okay, the statement of financial position, what is different from the service company? For merchandising company, it would have an item, merchandise, inventory, yeah, under current assets, yeah. The rest of the things are similar to the service companies, yeah. Okay, statement of financial position also has two forms. The first is report form. This is the report form or vertical form. Yeah, why is it vertical or report form? If you remember the accounting equation, assets equal to liabilities plus owner's equity. So vertical form, they list that sequence in the vertical format. So we start with assets and then liabilities and then equity. Okay. So total assets must be equal to total liabilities plus equity. Okay. Another format of statement of financial position, oh, it doesn't have here, is the account form or horizontal form. Ya. So it would daripada memanjang, sekarang dia melebar, horizontal. Ya. So one side is asset, another side is liabilities plus equity. Okay. I hope you're following me. Boleh paham ya? It doesn't show here, but I think you can imagine. Okay. This one vertical, the other one is structured horizontally. Yeah. Dalam bentuk akun. That's why it's called account form or horizontal form. Yeah. Okay, moving to another issue for merchandising business. We have some adjusting entries. Yeah. We just focus on the aspects which is different from the service company. Yeah, for adjustment. Yeah. Okay. For adjustment for merchandising business, especially when a company is using perpetual inventory system, normally the balance in the accounting record is different from the balance at the actual amount in the company's factory. Yeah, it's very normal in the business. Yeah, we cannot expect 100% accurate whatever that we record and whatever that we have at the factory, the gudang. Yeah. What caused the difference normally is because of shoplifting. Shoplifting is what? Anyone knows the term shoplifting? Shoplifting is when the customers is stealing, yeah, yeah. Ambil sikit sembunyiin di dalam kantong, yeah. It very usual to happen, that kind of shoplifting, yeah. And then employee theft, yeah. Employee theft. Some of the employees may do the stealing as well for the company's assets, yeah? Especially the merchandisers. Or errors, yeah? It could be errors in recording the merchandising. So it will result in the difference between what we have in the record and what we have at the actual storage, yeah? And the company, despite they use perpetual, they would do the physical calculation of the merchandisers, yeah, for the purpose of control, audit, etc. Yeah? So normally the physical inventory on hand at the end of the accounting period is less than the balance at the record. Yeah? So the difference is called as inventory shrinkage or inventory shortage. Yeah? Okay, I didn't mention, besides shoplifting, employee theft, or errors, it could also be the merchandisers have reduced in terms of value. Ya. Nilainya sudah berkurang. Ya. Mungkin ada yang rusak atau rusak ketika disimpan. Ya. So that's also result in the inventory shrinkage, ya, or inventory shortage. So that's why we need to do the adjusting entries for the difference between the balance of merchandise inventory at the accounting record compared to the physical merchandise inventory on hand. Okay. Let's say for this example, the account balance of merchandise is 63,950,000, whereby the physical merchandise inventory is 62,150,000. So there is a difference of 1,800,000. Yeah. The physical merchandise is less than what we have at the record. Yeah. So how do we do the adjusting entry is we debit cost of merchandise sold and then credit merchandise inventory. Okay. Okay, just a question. Is it possible that the physical merchandises is more than account balance? Let's say we put the other way around. Okay, the account balance is 62,150, but the physical merchandise is 63,950. Is it possible? So it's not shortage, it's over. Possible? Any answer? Any response?
I think it's possible.
Possible.
Possible. Why?
Possible because when they take notes, they didn't take all, Miss. They didn't see the inventory at all.
Okay, it's yeah, it's possible because of error, human errors. They may record wrongly, throughout during the process of recording. So the errors will result in the physical merchandise is more than what has been recorded. So how do we do the adjusting entry in that case? We will do the oppositely. Yeah, so debit merchandise inventory and credit cost of goods sold. Yeah, because we will add back our inventory. Okay, if the inventory shrinkage or shortage just now is very huge, is so large, we call that as a abnormal shortage, abnormal inventory shortage. So that one we will record separately as a loss from merchandise inventory shrinkage. Yeah, we don't debit cost of goods sold in this case. Yeah, the abnormal loss. Yeah, we will debit loss from merchandise inventory shrinkage, and we credit inventory. You get me? Previously, we debit cost of merchandise sold, we credit inventory. This is the normal amount. Yeah, it's expected. Almost every year we have this kind of amount. But suddenly the shrinkage is very huge. Yeah? Let's say 18 million instead of 1,800,000. So in that case, it's considered as abnormal loss. So we need to debit loss on merchandise inventory shrinkage, and we credit merchandise inventory. So it is recorded separately as a loss, and will be part of other expenses in the income statement. Yeah. Okay, we move to the closing entries for merchandising business. It's very similar to the service company, but there are certain accounts that are different, which is the merchandise inventory. Yeah? So we debit each temporary account with a credit balance like sales for its balance, and then we credit income summary. Yeah. Well, oppositely, for accounts with a debit balance, we will credit the temporary account, such as expenses, and then we debit income summary. Anyone still remember what's the difference between temporary account and permanent account?
Temporary account includes on the expense and revenue. But
why is it called temporary?
Because it can be eliminated on the end of the period.
Yes, it will be closed at the end of the accounting period. Means it doesn't have any balance to be carried forward for the next period. That's why it's called temporary account. Meanwhile, the permanent account like assets, liabilities, equities, it has a balance at the end of the period, and it will be carried forward to the next year. Yeah. So basically, any accounts under income statement is temporary account. Yeah. But accounts in the statement of financial positions, it is permanent account. Yeah. And then after we debit and credit all temporary accounts, then we debit income summary and we credit the owner's capital account. Yeah. If it is a net loss, it is oppositely. Yeah. So the accounts debited and credited are reversed. Yeah. And then we debit the owner's capital account for the balance of drawing account and credit the drawing account. Yeah. So this is the income summary account. Yeah, it will have credit of revenues and the expenses, and it will result to the difference of net income. Okay, this is the closing entries. Yeah, I believe you have understood this because you have done also in the service company. Okay, a little bit about financial analysis and interpretation. Even though you will learn in depth in the next course of analysis of financial statement, but just to highlight, for inventory, we have ratio of sales to assets. It basically shows how effective the company is using the total assets to generate the sales. Yeah? So the higher, the better. Means the company is fully utilizing the total assets to produce the sales. Okay. Okay, here the example. Ratio of sales to assets for this company is basically decreasing, yeah, from 2015 to 2016. Yeah. Okay, now let's go to periodic inventory system. Okay, small businesses, as I mentioned at the beginning of the lecture of this chapter, small businesses normally use periodic inventory system instead of perpetual inventory system, because perpetual is costly, yeah, costly and time consuming. Why costly? You need a system, and then if you don't use the system, you need someone to update continuously on the record of inventory. Okay, and time consuming because you always update it, so it takes time. Okay. So for small businesses, they would opt to use the periodic inventory system. Yeah? because it's less costly and less time consuming. Okay. Okay, this is not relevant at the current, the latest update. Yeah, we don't. Oh, sorry. Yeah. Okay, we can use this concept still. We have a separate account for purchase discount, and we have a separate account for purchase return and allowances. And anytime the company is purchasing, they would open the account purchases. Yeah, so there is no inventory merchandise, but we have purchase account. Yeah. So here, if you see the chart of accounts under periodic system, we have purchases, we have purchase return and allowances, and then we have purchase discount, and we have freight in. Freight in is the transportation cost. Yeah. So forget about the inventory merchandise account. Okay, here we would have a different accounts when we do the purchases. Okay, so whenever the company do the buying of merchandise, it would debit the purchase account. Yeah, and then the purchase discount are recorded in separate purchase discount account. Yeah. And the purchase discount is a contra account to the purchases. Yeah. So if you have purchase is debit, right? So purchase discount is opposite. It is credit because it's supposed to reduce the purchases. Okay, purchase return is also the contra account of purchases. So it would have the credit nature. Yeah. So if there is a purchase return and allowances, we would credit it. Yeah. The freight in, it will add the value of purchases, but we put it in a separate account. Previously, we put under merchandise inventory, right? But this one, it has its own account, yeah? Separate account. And it is debit because it has the same nature like purchases. Okay, let's say, for example, purchase 30 million of merchandise on account, terms 2/10 net 30. So we have to debit purchases and credit account payable. Yeah. And then when there is a purchase return and allowances, we would debit account payable and credit purchase return and allowances. Okay. And payment of the purchase, we would debit account payable and credit cash and purchase discount if it is paid within the discount period. Okay, so it's different from what you've learned for a perpetual system. Yeah, perpetual system, the discount is already been deducted at the beginning of the transaction. Yeah. Meanwhile, for the selling activity, we would record immediately at the net amount. Yeah, I know it's a bit confusing for you. So for periodic system, remember, purchases is at gross, but sales is at net. Okay, so debit account receivable at net amount and credit sales at net amount. Okay, understood? Okay, let's say purchase inventory where we have to pay the transportation cost. So we need to debit purchase and debit the transportation cost and credit account payable. Any question up to that? Okay, receive payment from the sales is usual. We debit cash and we credit account receivable. Yeah. The last here, receive 19 million blah 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 from the cash sales. So debit cash and credit sales. Yeah, nothing different. The difference are when we record the purchases. Okay, purchase, the discount, the purchase return are recorded separately, and we don't have the merchandise inventory system, the merchandise inventory account. Okay. Okay, the adjusting process for periodic inventory system is the same. Yeah. Because under periodic, we don't have the information on our record about the balance of merchandise inventory. So we cannot identify how much is the inventory shrinkage or shortage. So basically, under periodic inventory system, the shrinkage or shortage or over has already been included. It doesn't show here, but you have it in your book to calculate the cost of goods sold, because you don't have information, you don't have account of cost of goods sold, right? So what do we do under periodic inventory system is we do the mathematical calculation of cost of goods sold. Yeah. How to calculate it is opening inventory, okay, and then plus net purchases. Net purchases is coming from purchase plus the freight in, okay, and minus purchase discount and purchase return and allowances, okay. Okay, that one will give us the cost of goods available for sale. Opening inventory plus the net purchases will give us the cost of goods available for sale. How much the total of inventory that we have for the selling purpose. Okay, and then minus the closing inventory. The closing inventory or ending inventory, how do we get it? We get it from physical calculation. Okay. So that only we will get the cost of merchandise sold. So the cost of goods available for sale minus the ending inventory will give us the cost of goods sold. Okay, any question until that? Okay, the financial statements are basically the same like perpetual. Okay. But the closing entries, the system is the same. Yeah? The flow is the same, but you would have a different account here. Yeah, because you have purchase discount, and purchase return and allowances, and transportation account. Yeah, which are close to income summary. Yeah, other things are the same. Okay. Okay, so that summarize, that close the topic of chapter 6 on accounting for merchandising business. Okay. You have another 1.5 hours, basically. Can you do something for that duration? Do you prefer doing the summary and exercise or immediately the exercises? You want to do the summary? Do you get the benefit by doing the summary? You do?
Yes, Miss.
Okay, so
Yes, Miss.
please do the summary first for this chapter, because by doing the summary, you would read again the topic, yeah, in detail, yeah. You do the summary, and then later on, I will give you the exercises to do. Okay, we almost reached our final exam, basically. So you've got to speed up your learning. Okay. Any question?
Miss, when we do our examination?
Final exam is normally the parallel session, yeah, for the final exam of accounting. What do I mean by parallel? It will be done for all classes who are taking the introduction of accounting. So it's not decided yet. I will inform you. Okay. The date is not important, but the preparation is more important. Okay. Okay. If you find that you cannot study alone, why don't you do the group study? Okay. Can we help our friends? Can you make groups? How many of you total? 30?
30.
30.
30.
Okay. Okay, can divide the group and then you discuss the exercises together. Can someone take charge to divide the group? Who is willing to do that? I don't want to point out to someone. Let you yourself, who wants to take charge of the class? Who wants to lead the class? Anyone? You don't have the leader yet, right? Anyone? Hello? Come on. Someone volunteers? One. Come on. I thought everyone wants to be the leader. No? Oh, that's very sad. Okay, gentlemen, then let's have gentlemen. Or ladies also, no problem for me. Can we have a class leader? No one? Oh. Muharram, can you do that? What you need to do is you divide the group, let's say to 6 groups, okay? And then identify a leader for each group. The leaders must be someone who understands better about the subject. I think you can guess, right? Among your friends who are quite good or good enough with understanding the subject. So that leader will organize a Zoom session for each group and you discuss the question in each respective group. Yeah, I do that with the regular class. Yeah, because some friends, they can understand better when being explained by a friend rather than by a lecturer. Okay, and also you don't feel hesitate with your friend to ask the question. With me, maybe you feel hesitate, you feel shy, takut, yeah? But with your friend, maybe you can be freely asking the questions. Can, Muharram? Can lah.
Allah can.
Okay. Okay. I want you don't leave the meeting yet, all of you. You divide the group. I don't know how you do that. Muharram will lead that. But I'm gonna leave early. Okay. And don't forget to do the summary, and you need to submit it today. Okay. Okay. Thank you so much.